Well, greetings, test takers. This is Dean Tenney coming to you from my studio in fabulous Las Vegas with a shout out to Mometrics and their team and Jordan for giving us permission to explicate their content here on the channel. So they originally reached out to me about reviewing their content and being an affiliate in terms of marketing. And I said, well, I'm not really interested in affiliate marketing, but I would be interested in doing a real-time explication of your content and receive permission to do so. So what I've been doing is just buying these literally just like you would, and then going through them and putting on the channels and explications. So we've done about 4 of them now through the various series. So some are better than others. You have a Test Geek practice final. You already in the playlist. You have a Series 6 Kaplan practice test in the playlist, and now you have this third one. I think the one that has the strongest correlation is going to be Test Geek to your actual exam. And then Kaplan's a little tougher. You expect to pick up some scores and to be determined in terms of this one. All right, so let's get started. Number 1. Now, the idea here is you hit pause, you answer, you hit play, and you see whether you agree or disagree with me. And then at the end, I'll circle back. If I miss any, I'll let you know. Which signifies the maximum amount of equity shares a public company can issue. That is the authorized shares, right? And then shares that have been placed with investors would be issued shares, and outstanding would be issued less Treasury. Outstanding. So I like that one. The record date, that's when the board is going to look at their shareholder list. And if you're on the list, you get the dividend. If you're not on the list, then you don't get the dividend. So, remember, it takes 2 business days to show up on the list. So be careful what you're being asked. You're asking about the record date, and that's when you have to be on the shareholder list. I would also warn you that if you're talking about an open-end mutual fund, the chronological sequence is going to be a little different. The X date, which I think is more testable, is going to be the day before the X, or the X date is going to be the day before the record. And it's the first date on which the stock no longer trades with the dividend attached. If it's an open-end fund, it's going to be the day after the record date. In no circumstance should you use the impending X date as an artifice to get somebody to, as an artificial sense of urgency to buy the stock. Selling dividends is a big, big no-no. All right, so how does 34 affect the rights of shareholders? 33 is paper prospectuses, and 34 is people and places. So it requires public companies to report. That's what it means to say you're a reporting company, right? If you're a public company, a reporting company, synonymous, that means you're going to file 3 10-Qs, quarterly reports, and a 10-K. That 10-K is the 4th quarter report as well as the annual report, and that will be audited. So 1 sounds pretty good, or A, I should say, sounds pretty good. Penalties do not meet financial expectations. No. It requires company to register. No, that's 33. C would have been the right answer to 33. D is correct, but it's not about the rights of shareholders, right? So, you got to be real careful about what is the best answer. D is part of 34, but it didn't ask about 34 in general. It said shareholders. What type of preferred can be exchanged by the common by the decision of the owner? That's called convertible preferred. Convertible, you can switch your status from being a preferred stockholder to being a common stockholder. If we didn't have the cooling off period at quiet time, I'd be calling you every day going, well, hey, you know what IPO stands for, don't you? Instant profit opportunity. What I'm supposed to say is we're presently in the cooling off period at quiet time. I'm not allowed to comment on the prospects of the issuer. What I can do is send you a preliminary prospectus, which has pretty much everything you need to make a decision, except the final offering price, which is huge. I can use that to get indications of interest, which are non-binding on all parties. I'm not allowed to advertise, but I can place a tombstone. Tombstone is not considered an advertisement. You should have been pretty quickly to get this to A or D. And then you should have tossed out A, because to say the SEC reviews or approves anything is really, not kosher. Right? So boom, it's D. 6, in which market are the initial offerings of securities sold? The answer is C. You should definitely be able to distinguish between the primary market, where the issuer receives the proceeds, and the secondary market, where the previous owner receives the proceeds. Over-the-counter is a type of secondary market that's best characterized as a negotiated quote-driven market, and the auction market is also a secondary market that can best be characterized as order-driven. So the answer here is C. How do rising interest rates affect the price of a bond? You should definitely know there's an inverse relationship. Some of this should be familiar from your SIE, but if interest rates go up, the bond prices goes down. Very testable. We assume everybody in the securities industry knows that relationship. In a bond investment, which of the following pays periodic interest payments, but also repays the principal in one lump sum? I would prefer this says all the bonds come due at one time, which is what this is about, term maturity. Serial maturity means the bonds come due at different times. So I don't like the language here, but, D is the right answer. You should definitely know a bond point is $10. Which of the following corporations would be regulated under the Trust Indenture Act of 39? I wouldn't really worry about this 5 million thing, but I would know the Trust Indenture Act. It's A, requires a contract between the trustee, the issuer, and the trustee for the benefit of the bondholders. So the answer is A. What type of government security has a maturity between 2 and 10 years? A, Treasury notes. What factor determines if a municipal bond will be taxed at the local level? Suitability is really important, right? And, reciprocity does not apply state to state. So it's very important when I'm selling you either a muni bond tax-free fund, mutual fund, or a muni bond, that I know where you live. Because if you're a resident of California, for example, you buy a Nevada bond, California can and will tax you, right? So that's going to be important. By the way, physical addresses do not determine residency. What type of risk refers to an issuer unable to make interest payments on its bonds? So that's called default or credit risk, right? There's 2 risks when you buy a bond: credit risk and interest rate risk. Interest rate risk, applies to all bonds. You don't have credit risk in Treasury securities, right? Because that's the safest, but the answer here is C. I would also know that you can take care of that through diversification. And so you can diversify that risk away by buying a bond fund. It's unlikely every bond in the mutual fund is going to default. The full faith and credit, very testable. GNMA has the full faith and credit of the United States government. What is the name of the rate banks charge other banks for loans? Well, Fed funds is banks with excess reserves lending to banks with deficient reserves. I would know all those rates, by the way. The discount rate is from Fed to member banks. Broker call is banks to brokerage firms used to finance margin accounts. And prime is banks to its best commercial customers. I would know every one of those things in that answer set. Which is not considered a security? Well, a CD is not a security, but certificates of interest, that would be like evidence of ownership. I have a royalty of an oil and gas thing, and that definitely can be transferred to a third party for profit or loss. So, key one on A and B is certificate of interest. That means ownership in a security of some sort. I wouldn't worry about that. I would imagine as a 6, you're going on to a 63 and or a 65. And if that's the case, then this will become a much bigger deal on that exam than it is on your Series 6. Reg Ds are private placements. They're safe harbors under 33. So, 33 says if I'm going to sell brand new securities to the public, I need to make a registration statement. But if I use Reg D, that's a private placement. I make it by invitation only, and I only offer it to accredited investors. So that is indeed a private placement. Under Reg D rule, can companies sell securities? Under which Regulation D rule? There's 3 of these. There's 504, and that's the answer to this one. And then there's 505 and 50C. So the answer is A. I don't think this is a big deal on the 6, but 505, I can have up to 35 non-accredited investors I can't solicit. I can raise unlimited sums of money. 506, I can't have anybody who's not accredited, so everybody has to be accredited. But I can have I can solicit. I can advertise. 18 is A. Which condition or event would cause the SEC to revoke a pending registration of a broker-dealer or a representative? Well, I think I would use here the Sesame Street trick. One of these things is not like the other. Bribing a customer to purchase a security sounds pretty bad. Business misconduct by the issuer. No, that has nothing to do with this, the broker dealer, the rep. Failure to meet business objectives. No, that happens all the time. Insufficient funds in your personal banking account. Well, that's bad, but it looks like given this answer set, A is the worst. Who is exempt from registration under FINRA Rule 1032? FINRA would like to run the rule, but they don't. A floor member of a national securities exchange, if you're just on the floor in New York, you don't make public contact, you don't need to be registered. Futures trader is again not part of FINRA's, purview, their fiefdom. The assistant to the general principal, as long as they're solely clerical nature. By the way, I should know this is D because I got A and B. Once I'm taking A and B, I got to take, choice D. According to FINRA, what is the definition of a branch office? Any place where customer orders and reviewed, and I'm not sure about the grammar. Any places where orders are executed. No, these are A and B could be the support unit or back office. Any place where banking and securities is conducted. There we go. C. What condition must be satisfied before an employer of a FINRA member firm can accept employment or compensation from another business? This is called outside business activities. You have to notify your firm in writing. Now, by the way, that would be D, and then they may or may not allow that according to their house requirements. So D is a better answer than A in this particular situation. What charge may result from a registered rep generating an abnormally amount of commissions? I would definitely know. That's called churning. Selling away, I would know as well. Selling away is when an association person gets somebody involved in an investment not sponsored by their employing broker dealer. So it's not the answer to this question, but you could see this as well on your test. So make sure you got that one down too. Answer 23 is B. Which amendment to the Securities Exchange Act of 34 allowed the Securities and Exchange Commission to delegate powers to the SRO? I haven't had anybody tell me they've seen this in years, but that's the Maloney Act. 25, under what type of retirement plan does an employer contribute a certain amount to an employee's retirement fund each year? That's called a defined contribution, right? And in a defined contribution plan, the employee is assuming the investment risk. I would know in a defined benefit plan, that's where you work X number of years, you get a percentage of your base pay and healthcare for the rest of your life. The employer is assuming the investment risk. Which retirement plan can be used by self-employed individuals who want to exempt certain employees from coverage? That would be a SEP-IRA. Customer accounts, retail communication stuff on 6 is very testable. I'm not so sure they're going to get into the weeds on this, but Keogh is self-employed. You got to cover everybody. Roth, the big one there is you're using after-tax money, no RMD. So I like the answer set more than I like this particular question. 27 is a Coverdale, and I would be able to contrast a Coverdale with a 529, and usually the 529 would be the better deal, but the maximum contribution is based on D, the child. 28, under which section of the Securities Act of 33 states that misrepresentations or omissions of material fact are prohibited in the issuer's written and oral communications? Again, I'm just being exposed to these Mometrics. I think it's still worth putting on the channel, but I don't think you're going to see that on your actually Series 6, right? So part of this exercise is to give you more performance opportunities. That's why I call practice questions and test questions. And I think it's worthwhile. Otherwise, I would not have continued doing these explications of Mometrics content. But, it seems like in most of their exams on the questions they're on. I mean, they're spot on. But then they got these questions. I'm like, well, I'm not sure. It might be a function of, not, having too many study guides. I don't know. Anyways, 2210 does not fall under FINRA's regulation of online mutual advertising. This is one I would not worry about. The answer is A. 30, I would definitely know. 30 is big time test thing. I just told you about retail communications. So you need to make a distinction between retail communications and correspondence. There's quite a couple of 2, 3, 4 questions here. So retail communication is to more than 25. And if it's retail communication, it has to be approved by a principal pre-distribution. Correspondence is going to be 25 or less. And that's going to be pre or post distribution in terms of that. So correspondence is set to less than 25. I don't like that because it's actually 25 or less, right? But by process of elimination, what I mean by that, by process of elimination, I should know it's 30 days. And so I should have been able to get this to C or D. And then I should know that D is actually going to be retail communication. So I'm not a big fan of this particular answer set, but it's definitely going to be there. So just make sure you got that. My point is I still got to roll into C somehow, some way. Which situation, according to FINRA, does not constitute a business relationship? A customer with a current security position, yes. A firm has done business within the 18 months, yes. A person who's inquired about products, yeah. You know what this is about is, can I follow up or with a under the cold calling rule? So the answer to 31 is D. And again, I don't really think this one is kind of spot on. Customer complaints, I would definitely know our 4-year record. They have to be filed quarterly with FINRA unless there's somebody alleging fraud or something, or a sense of urgency. This is Rule 3110. I wouldn't worry about it's 3110. I would know that it's 3110, not so much what Rule 3110 is about complaints. Written complaints must be handled by a supervisor. What type of investor would be best equipped to invest in volatile stocks? An investor looking for investment growth without taxation? Yeah, kind of weird. An investor that wants cash flow at periodic intervals, that's out. So we can get rid of that one pretty quickly, because volatile stocks are typically dividends, we get in the weeds a little bit, but dividends act as a stabilizer on a stock price. An investment with an income stream is going to be more stable in price than an investment without. So that's out. An investment with a high liquid net worth. Yeah, I'm kind of looking at, this one. And that looks like our best answer given the answer set again. So it's not that I really like this answer set. I just think given this answer set, that's my best choice. Which investment or which assessment is most important when determining, this is test question, is your risk tolerance. Specific stocks, right? How much risk tolerance do you have? Those other things are very important. But not as important as your risk tolerance. I was thinking about opening an account with a guy, and my minimum relationship was a little higher than what he had to invest. And I was thinking about making an exception. And I said, well, how are you going to feel if you lose this money? And he said, I'd kill myself. And I said, well, then, I'm not going to open an account with you. I don't want to have any clients who would kill themselves. His risk tolerance was such that he shouldn't be in securities markets. I said, well, what you should do is talk to an insurance agent about an insurance product, or a banker about banking products, because if you're going to kill yourself, you lose your capital, you shouldn't be doing this. Your capital is at risk. 35. What type of mutual funds offer shares on a continual basis, issues common stocks, and invests in bonds? Well, they can invest in other things, but you definitely are going to get tormented on the difference between an open-end fund that is continually offering new shares to the public, can only have one class of equity, right? So they can invest in bonds, but they can't issue bonds. And boy, you better be able to contrast open-end and closed-end. You should spend some time being able to do that. I don't like this question, 36, and the reason I don't like 36 is the maximum sales charge in a mutual fund is 8.5. So I don't even know why they're asking us to do this. But that being said, the way we figure out the public offering price is we take the NAV and we divide by 100% minus the sales charge. So we're going to take 1750. We're going to divide by 0.990, and we will get choice B. And again, I would know that you can't have a 10% sales charge. So, I don't know why they would even ask you this. 8.5 is the max. So if you're charging 8.5, you got to give people a break point. You got to let them give them a quantity discount. And then that's where all that letter of intent stuff comes in. And that's very testable. Now, the other thing you should be prepared to do here, we were given the NAV and the sales charge, and we calculated the public offering price. The other thing you should be able to do is take the public offering price and NAV and do percentage sales charge. That would be the POP minus the NAV divided by the POP, the public offering price. Well, here we go. As I just told you, this is very testable, right? So what method can an investor use to reduce the sales charge on multiple purchases of the same mutual fund? I'm looking for a letter of intent here. So use breakpoints. Oh, there we go. Letter of intent. I didn't see it. Sign a letter of intent. I would definitely know that letter of intent is good for up to 13 months. I would know it could be backdated 90 days. I would know it's non-binding on the customer. There's no way they can be hurt. If they don't fulfill that letter of intent, the extra shares they're going to get will be escrowed. And we'll just back flag the account and look like it would have looked had they not done it. Well, one of the disadvantages of a mutual fund is you give up the tax control of your investments. The portfolio manager is going to decide when it's time to realize a capital gain. And so to be a long-term capital gain, the mutual fund would have to be at risk for more than 12 months. And this is saying short-term, so it would be the opposite, which in this case would be D. And remember, the tax is going to be based on the holding period of the fund. Now, when you redeem, then it'll be based on how long you've had the mutual fund. According to FINRA rules, when can a mutual fund advertise itself as diversified? This is testable, 75, 5, and 10. The answer here is when the mutual fund manages more than 5 different types. No, there we go, 75, 5, and 10. They have to have 75% of their assets invested in such a fashion that no more than 5% is in any one position, and they're not allowed to be a principal stockholder. You own 10% or more, you're a principal stockholder, and they've got to be able to meet redemption requests. So the answer to 39 is B. 40, you should definitely know, muni bond fund, right? If they say the question, they like questions like a customer's in an uncomfortably high tax bracket, something like that. The other thing you should be able to do, and hopefully you remember from your SIE, is to be able to calculate tax and tax-free equivalent yields. So you can determine whether they belong in the corporate bond fund or the muni bond fund, for example, in terms of suitability. So we definitely know that. 41, which is not a part of the criteria of the Investment Company Act of 1940 for an investment to be considered a mutual fund. Which of the following is not part? Well, A and B certainly are. And so it's either C or D. You should definitely know 100 investors, 100 shareholders. I think it's ridiculously low, by the way. We're going to have all those players there in choice C. So by process of elimination, it would be D. And remember, you can not be diversified. It's just about whether you can hold yourself out as that. 42. What must happen when a mutual fund assesses a 12B1 fee? Very important. That's a promotional expense. I would know a 12B1 is a promotional expense to implement or terminate. You have to have a majority vote of the shares, a majority vote of the disinterested board. And the most you can charge and still refer to yourself as a no-load fund is 1/4 of 1%, 0.25. And over the life, the most you can charge is 0.75 over the life. The fees must be approved by the SEC. You should definitely know that's not true. The SEC doesn't approve anything. A majority vote of the board? No. It's a majority vote of the board and the shareholders. Now, I would prefer shares than shareholders, but I don't have that available to me as an answer, so I'm going to take C, right? And I would know it's a majority vote of the disinterested board as well. What type of investment sells bonds to investors as equity stakes? Wow. So, I don't like this. It's A. but I wouldn't worry about A being the answer here. Unit investment trusts have assets that are professionally selected and passively managed. And what you have is an equity ownership in the UIT, which is typically a bond portfolio. Yeah, I'm not a big fan of that. Money market securities must mature in how many months? We used to just say 12 months, but then people were pushing the envelope to get higher yields. So now it's mandated that you can't refer to it a money market if it's over 13 months. So the answer is C, 13 months or less. What type of settlement option for a variable annuity allows the annuitant to make withdrawals in any amount he chooses? That would be random. You're definitely going to get some questions on variable annuity. So make sure a variable annuity is the way I think of a mutual fund, not a variable annuity, not testable. I think of it as a mutual fund with an insurance wrapper. A mutual fund with an insurance wrapper. You should definitely know the money going into the variable annuity is after-tax money you've already paid taxes on. That's your cost basis. When you're 59 and a half, you can get without penalty, start doing these random withdrawals. I would definitely know LIFO, last money's in or first money's out. I would definitely know that. So expect 3-4 questions on variable annuities. So make sure you got that. What type of insurance guarantees a minimum cash value and a certain growth rate? Well, that's called universal life. Which federal act requires the variable life insurance policies and variable annuities must be registered with the SEC? Well, remember, the whole point is that it's a mutual fund with an insurance wrapper, and that mutual fund is being offered to the public, and so that's going to mean 33, right? Right, because it's a security. That separate account is a mutual fund. What types of fees does a mutual fund incur in conjunction with the activities related to its portfolio turnover rate? Yeah, usually this would be available in the statement of additional information about how much that is. But yeah, the more, active our portfolio manager is, the more of those kind of fees we're going to have. Which of the following is a feature of an UTMA but not an UGMA? I wouldn't worry about this particular question, but I would know that UTMAs or UGMAs can only have one custodian, one minor per account. I would know the minor's tax ID number goes on the account. I would know the gift is irrevocable and there's no margin. So the main difference between the two is with UTMA, you can stipulate up to the age of 25, whereas UGMA, it's 18 or 21, depending on the state. So the answer is B. You're going to get a question, very high probability, about UTMAs and UGMAs, and I just told you what to be aware of for those. 50, FINRA Rule 3370 allows a member firm and its registered reps to accept purchase orders from customers when the customer maintains a margin balance sufficient to cover it, and it would be buying power. I mean, that's way beyond the 6. The securities received against payment are valued more than the amount of the execution. Again, I'm not a big fan of this question, particularly on 6. Customer been a client of the member firm for over 2 years? No. The securities received against the payment are the same amount as the execution. It's D. I'm not quite sure why they think that is something to ask on a 6 as a practice question, but all right. Well, gee whiz. That's kind of fun. We don't usually get these things done as quick. I went pretty quick because, on some of these exams, oh my God, if you join me for 65, these explications go on for, over an hour. So hope you found that helpful. I'll put the answer key into the description of the video description. And if I feel it's necessary, I'll make a comment. If I missed any, I'll come back, and I don't think I missed any, but if I did, I'll certainly come back and either put that in the video description or tag on towards the end of the video. Remember, inch by inch, your series 6 is ascension, yard by yard, your series 6 is hard. I'll see you for the 65 perhaps, or 63 perhaps, or perhaps both.